Hi, I hope I was doing well today. We're going to talk about my new UK growth stock that is doing absolutely amazing today. It came out with a trading update as well, which was very good. And as well as that, we'll take a look at some other news stories around the UK market at the moment. Hope you enjoyed the video. Let's get started. So, pretty good news today in the UK inflation side of it. It came in at 2.5%. That potentially then gets the interest of, can we have a rate cut? That'll be really good for the UK markets. We've lacked a little bit of positivity in the UK markets at the moment. Lower inflation would be great. Obviously, if we're having a slowing economy, then that might lead to the lower inflation, hopefully, and might actually keep that inflation from going up. If we can get that inflation rate a little bit more steady and we do get those cuts, it'll be a massive boost to the UK. We need a little bit of confidence here to get these stocks going. And today, it had that confidence. So it was good news right there. Looking at the US side of it as well, good inflation data from the US markets. I got to say though, it's still a little bit too high where I think the Fed might be a bit interested in the US markets, but we'll see what happens. In the US, they're in a lot better place where the economy is holding up a lot better. In the UK market, the UK economy isn't holding up as well. So we will have more pressure on, I think, the rate cuts in the UK rather than the US, so they can afford to probably have it a little bit longer. JD Sports. So JD Sports, we mentioned it about this yesterday, said that the stock had a major dip, as you can see here. I said in yesterday's video, I actually did go and buy the dip on JD Sports. I think yesterday was a ridiculous dip on this stock. It should not have been down 12% at the open. There was a profit warning, but it wasn't that bad. I mean, what was it? A 3% change in the guidance? And as well as that, let's not forget, this company's 7 times forward earnings right now. Let's not get too silly about it. Now, obviously, you guys on the Patreon, which you can join with the link in the description, guys, £6 a month, or if you want to pay annually, £5.10 a month. So you can join that through the link in the description. But obviously, you guys on the Patreon knew yesterday I did buy on the dip on JD Sports. I just could not believe how low it had gone. And I guess we kind of got the perks there from buying in the dip. The stock has started to come out of that dip very quickly and is only now down 3%, which obviously is pretty good. What also is good to see today is from JD Sports, the CEO came in and bought a ton of shares. They bought around about 100k worth of shares, which is really good to see. Card Factory as well. That was we had a stupid move in JD Sports. We had a stupid move in Card Factory because the stock went up a lot yesterday, gave it all back, and then it has started rallying back up again. So this week has been the story of stupid moves in the markets. And that was exactly the same with my UK growth stock. It was, once again, a stupid move today. So we had the stock, which, by the way, Audioboom obviously performed very well. I think last time I covered this stock, it was a 60 million market cap on the YouTube channel. And I said to you guys, this is my new UK growth stock. Obviously, you guys on the Patreon, I think I started talking about this when it was like a 45 million market cap company. Now it's gone all the way up to 71 million market cap company, and it's gone up a lot here. Shout out to Crystal Balls, obviously. You kind of gave this stock on the Patreon. That's a great thing about the Patreon now, is that it's like similar investors to me. You know, the trying to look for the long-term game plan, looking at those opportunities. Is it undervalued? And Crystal Balls was actually the one that brought this stock to my attention, and I'll shout you out there. But obviously performed very well for us. We're up a lot on this stock since we started buying it around about only a month ago now. So it's been on a major rally since we did start buying into Audioboom. But yeah, another stupid move in the UK markets. We've seen a lot of these. So today, stock came out. Was very happy with the trading update, and then it gave it all back, and within a half an hour period the stock had a 7.5% swing, which was just nuts. I was like, okay, this is the week of stupid moves in the UK markets. Give me the stock. I'm going to buy it. So when it dropped, I was like, I'm going to go buy it, and I increased my position in Audioboom right down here. And obviously, my big buy must have lifted. I'm not only joking, but yeah, it just looks ridiculous that this stock was negative on a day after this update, and then obviously then the stock went up to a rally up massively since that time frame. From the lows, it was up 8%. So a really good buy once again. I guess that's a great thing with the Patreon as well. You know, kind of what I'm doing in real time when all this kind of stock moves is kind of going on here. You guys on the Patreon obviously saw this update that I put out about Audioboom. But the update, yeah, absolutely fantastic. I'm really happy to have this as my UK growth company. What we were looking for, right at the top, adjusted dividend profit ahead of market expectations. 13% annual revenue growth, so the target was 11%, so they've absolutely smashed their expectations. Once again, another profit upgrade. Upgrade on the revenue, they also did profit upgrade. So adjusted EBITDA, as you can see here, of 3.4 million, ahead of expectations again, up 3.8 million on 2023, which was a loss. Record adjusted EBITDA as well of 2.1 million in Q4, up 1.6 million. So you look at that Q4, they're making 2.1 million alone in Q4 now. So you imagine last year, 2024 I'm talking about, 2024 the first half was unprofitable, and in the second half now they were able to swing that around to a profit. And also if you look at the Q4 alone, massive increases, which is really good to see. Showcase revenue growth of, I should have highlighted that. I don't know why I haven't highlighted it for you guys. Showcase the new platform, the platform that's enabling them to get higher gross margins, growing at 56%. That's actually really impressive, isn't it? Contribution here of Showcase has increased from 32% from 23%. Average revenue as well, up 26%. The total of brand advertisers up 13%. The cash as well was up to 3.9 million from the 3.7 million. And they've also got a 3.1 million available on their overdraft facility. They've also got a clean balance sheet. So everyone that kind of went, oh, they've got a crap balance sheet, not when you start scaling up the profitability levels that Audioboom are now doing. I pointed that one out for you guys as well. They said that when they look at their current pricing for 2025 so far, it's actually 17% higher than 2024, which is great to see. And the company already has revenue of more than 54 million for 2025. So in 2024 they did 73 million, so that's a really good start to 25 that they've already got that booked in. And because they have the confidence to now say they expect record adjusted EBITDA and profit in 2025, yeah, of course, that's what we expect from the business. So really good from that point of view there. They said that there is going to be further reduction of more than 3 million of annual minimum guarantee obligations beginning Q1 2025, and further reductions to their minimum guarantee throughout 2025. So as I said before, this company was hurt because what happened during this period of time when the stock went absolutely ballistic is they went, oh, this is going to last forever. They gave minimum payments to all their creators out, and then they realised there was a bit of a comeback after everyone went back to work and everyone stopped listening to podcasts as much. They didn't know that was going to happen, so they offered crazy contracts out where they went, oh, it doesn't matter what views you get, we'll pay you whatever. And obviously the views died down, the advertising rates died down, and they've had contracts that are loss-making. All those loss-making contracts are coming out of the system more and more, and that's why we're seeing the surge in profitability. So you imagine, as what we're seeing right now, is that there's going to be another 3 million of minimum guaranteed obligations removed at Q1 2025. So the first half of 2024 was loss-making. So even with the loss-making half in 2024, in 2025 so far, they've been able to make up 3.4 million. So you imagine that in this year, 2025, they're going to probably not be loss-making in the first half. They have even more contracts coming out. That adjusted EBITDA margin is going to improve once again even more this year. And if you look here, the best quarter so far for profitability Q4, 10% EBITDA margins. So when we get further along into the back end of next year, and that Showcase is making up more of the revenue, more of these contracts are coming out. You also have the H1, which was unprofitable last year, is probably going to be a lot better this year round. These numbers are only getting started. So they're already up to a 10% EBITDA margin already. And the other big impacts are coming out. This company is going to absolutely scale on profitability, and this stock's going to do very well. I was looking at Stockopedia's review of it, and just to give you another opinion. And once again, I am like coming the angry man shouting at Stockopedia on every video at the moment. They covered their earnings, and they were actually amber red on the update. I just couldn't believe it. So once again, another upgrade, following on from November's upgrade. No. They did an upgrade from November's upgrade to December's upgrade to now upgrade. They've done 3 upgrades in 1 month. The big increase in revenue and profitability, as you can see here, They said shares have done very well, so it's a good thing that you didn't listen to Stockopedia in November, because you would have missed out on a 75% gain. Hope you listen to JKR Investing, you know. And he says here, however, this reminds a painful shareholding for investors who bought during the pandemic. Boom's shares peaked more than £21 in 2022. Who cares? And not to be horrible, but this is investing, guys. No one at this point here goes, oh, what about all those investors that are back in 2022 at £21? No one cares, unfortunately. No one today, buying or selling, thinks about those investors in 2022. So what? Unfortunately, we don't care what those investors are doing. Right now, for me, I'm looking at this stock and can I make money on it right now? I'm more bothered about my average. You know, my average when Audioboom was still amber and red on Stockopedia. I'm happy to make money from this sort of average. And I looked here and I thought, I just don't agree with this view here, because it went on to about the market. I guess there's I wouldn't say about competition. My thing would be advertising rates. That's probably one of the biggest threats to it. The other thing is about the balance sheet. I don't agree with the balance sheet because they're now profitable. There's not that much debt on there. There's not going to be that much issue for the balance sheet now. I don't agree with that. And in terms of valuation, the P is 31 and seems quite a fair price. I don't agree, because you've got a double-digit company here growing, but that profitability is going to scale up massively now. You know, because what's going to happen is in H1 they were majorly unprofitable. Very quickly, they're not going to be as majorly unprofitable, and as well as that, you have easy comps to overlap. And let's not forget, there was no mention here about the contract situation. Those negative contracts we already saw in Q1, there was 3 million worth of contracts. You had 3 million onto that bottom line already. That P is going to look very cheap already with a 3 million improvement, and that's not including the big improvement in the ad rates, for example, the showcase, the higher gross margin part of the business making up more of the revenue. These profit numbers are going to be absolutely smashed out of the way. So, I mean, there's 10% revenue growth forecast in here. I personally think profit growth might be even more than 10% revenue growth. And if you look at the EPS point of view, you've got, because, remember, Showcase is growing at 53% and it's becoming a bigger part of the platform. P ratio wise, yeah, we're down at 27 forward times earnings, but let's not forget, I think the net profit is going to go up massively. Right here, they're expecting a 2.3 million in net profit. That, you got to remember, in that profit there was a big loss in H1. So let's just say it's not as negative in H1 as what it has been. You're probably going to recoup 2 or 3 million there. I can't remember the exact numbers. So you're up to about 5 million-ish. You've got the contracts going out. You're up to about 8 million-ish. Yeah, I think the profitability is going to be more towards 6, 7, 8 million here. And there's going to be massive profit upgrades here. That's my opinion. And to show you some numbers here, guys. So I put 10, 15, 20% revenue growth in. I put a profit margin of 5, 8, 10% growth in, because they're already at 10% EBITDA margins right now in Q4. You imagine how higher they're going to get as they scale up. And 20 times earnings. And even on the low side, I'm seeing good opportunity. Mid side, good opportunity. High side, really good opportunity. This is 20 times earnings. I think this company probably will trade around 30 times earnings. So if I just look at the stock right now at 30 times earnings, there's mega upside. So I thought this was a really good update, and I still think today the stock should have probably been even higher. So when the stock went negative, I was like, yeah, I'm buying those shares today at that dip, because that was just crazy low. And the fact that I'm still looking at the likes of Stockopedia and they're still amber red on it, even though the company is now moving towards is profitable, the company is growing at very good rates, the contracts are all coming out, and that's going to lead to more profitability. I just don't know how. So I'm still surprised that people are still negative. I'm still surprised someone like a Stockopedia, for example, are still amber and red on this position. I don't know how you can sit there from 6 months ago and still be as negative as where you were 6 months ago, even though the company has just scaled up revenue massively and the net profit has just gone from a big loss to a big profit, and that's with H1 being negative. And so when we have 2 halves of profitable periods, this is going to do really well. It shows to me that people still yet to wake up to Audioboom. So obviously the stock looks done really well for me so far, and clearly people are still sleeping on it. And people, when they realise that actually this company is actually going to do really well in the next kind of few years, I think the stock could go on to do even better. So yeah, well done to any of you Audioboom shareholders, guys. Thanks for watching, guys. See you in a bit.